So at this point, you guys know we've been selling off a lot in the stock market this year after a very strong 2023. Don't forget that November and December, especially, great 2 months to end off the year. And now to begin this year, we've been seeing a lot of selling, which has opened up opportunities potentially in a couple of stocks. So we're going to break down 5 in particular in this video I'm watching right now that I believe are a bit oversold. So hit the like button, make sure to subscribe. You might as well follow me on X as well at Stas Talk Stocks, and make sure to get up to 15 stocks for a moo, each up to $2,000, guys. Use that link down below. We'll talk more about that later. And with that being said, cheers. Let's dive right into the video. So yeah, again, markets have not been looking so pretty to start off the year. And today, right now, when I'm making this video, it's about 3:45 p.m. on the East Coast. We're selling off across the board yet again. The Russell's down 1%, NASDAQ's down 0.7%, S&P's down 0.7% as well, as the Dow's down 0.4%, and we have the VIX up 8%. And the funny thing is, the VIX is still pretty beaten down, if you ask me. You guys can see here the VIX peaked at about 23 points back in the end of October. Then it got down to 1180. You guys can see right here, 1180. Then it got up to about where we are now, just under 15. So arguably still pretty low on the VIX, which we're not going to get into that debate in this video, guys. But just know VIX is creeping up. Indexes are selling off. They have been for the entire year so far, pretty much. As we're just about 2.5 weeks in 2024, and we'll see if that changes maybe later in January, or maybe even at some point in February. So we'll see, guys. We'll see. And with that being said, let's talk about the first stock here, which is not crashing or down 50% or anything crazy like that, but it is down a little bit. It is Pinterest. It's down from what, 38.65 to about 36.50. So we are down about 6%. Not a crazy amount, but we are pretty oversold on the RSI down here. We're getting right by the 180 SMA. We are pretty much right at it right now, which is a big support on the 4-hour chart. And we're right by the lows, it looks like, from the beginning of this year. About 2 weeks ago, we hit about 35, 36 bucks. So yeah, let's see if we essentially rally off of this point. Do we get some buying? Maybe we start pushing towards 38, towards 40. Maybe that breaks even. So I think this dip in Pinterest, again, it's not extreme. It's not a 50% drop, but it is one worth monitoring here, maybe for some sort of continuation play. So PINS, Pinterest is the first one. Enphase is number 2, which has gotten hit way more than just 5%. In fact, this is actually under the 50 and the 180 moving averages on the 4-hour chart, and we are about to get a death cross potentially, as the stock is down over 3% on the day right now when I'm making this video. So we are down a good chunk recently on Enphase, down about 35 bucks per share. Looks like it's at 105 now. It was at 140 just at the end of last year. Just to show you guys how things can turn fairly quickly. It's down 25%. It's in a bear market since the beginning of this year, which is pretty nutty. So Enphase right now, even though it's down a good chunk, it is still arguably holding an uptrend here. You guys can kind of see it. Not the cleanest cut uptrend in the world, especially as, yes, we're under the moving averages, but we're still somewhat in this channel right here, and I think we're getting a bit stretched on the downside. We are noticing the RSI stabilizing a bit. So we'll see if we do get buying pressure. Again, we're not getting it quite yet, but if we do, in this range, $100, $105, $110, maybe we could get ready for a bounce back potentially, especially if we start breaking above $115, $120. Maybe we start getting that breakout back to the mid $100 range. So keep your eyes on Enphase. ENPH is the ticker, and Intel, believe it or not, which was pretty overbought a couple of weeks ago, now it's cooled off a bit, opening up potentially for a buying opportunity here, maybe after earnings. You guys know me, I'm not the biggest earnings trader. I'm not a big fan of doing that. So we do have earnings coming up in 8 days, so about a week from now, which makes things a bit interesting here with Intel. But it is down about, let's see, from 51.20 to 46, about 10%. So we are slightly in correction territory, and we're right by the 180 SMA and right by the lows, looks like here from about 2 weeks ago. So Intel at this spot is very, very crucial to watch in my opinion. And let's say we break this trend line here, the 180 SMA, we break under 45 bucks. Maybe we start slipping even more aggressively from there down to the low 40s, dare I say, high 30s. But as of now, we're above the 180, holding the uptrend. Let's see if we get some sort of continuation on Intel. And same here with Sirius XM, which, let me say this, these are all for trades, not for investments, guys. Keep that in mind. I would not invest in Sirius XM personally, but I would consider trading it. And again, all these that we're talking about are for trades. So Sirius XM, which is up 2% right now as the markets are about to close in 7 minutes, this is one that is pretty oversold and towards the bottom of this channel on the 4-hour chart. And it looks like we're actually getting buyers above the 180 SMA, and we're starting to spike up here towards the 50. We're not fully breaking out yet, though, but it looks like we could potentially be on the verge of testing a breakout, which could happen in my eyes if we do take out 540, 550 especially. So let me set my alert at 550 here as, again, we're pretty much at the bottom of this channel, but buyers are coming in. Now let's see if we get that full break. And look at last time it broke out, guys. We pulled down to the bottom of the channel right here. Buyers came in 450, 465, 470, and it ripped all the way to almost $6. Essentially, now we're getting ready to see if it does it again. So my alert, like I said, is at $5.50 here on Sirius XM. SIRI is the ticker. And the last one for this video, ladies and gentlemen, is GEHC. And by the way, if you guys stuck till the end, I appreciate you all. As always, without you, this channel would not be possible. Thanks again for tuning in, as always. So the last one is GE Healthcare. Again, ticker symbol GEHC. This stock is getting pretty beaten down in the short term. And mind you, it's down 3% right now. It looks like we are right by the 180 SMA. It looks like we're a bit, of a falling knife right now as well. So keep that in mind. But if we do start consolidating at this point, let's say at about 73, 72.50, 72 bucks, right in this general area, we could be getting ready maybe for some sort of rebound. And that's kind of what I'm waiting for. I'm going to wait for the recovery, see if we rip off that point or bounce off that point, and start heading back to the mid-70s. That's where I think the money could be made on this one, especially on a move back to the high 70s. So yeah, I'm watching the weakness here as it is oversold on the RSI. Again, bottom of the channel as well. So let me set my alert at $73.50. Let me do that now. Mark is at or above 73.50. And yeah, we'll see what happens. And again, guys, these are all for trades. Keep that in mind. And please do your own research, your own due diligence. I'm not telling you to buy these stocks, trade these stocks, do anything. All I'm doing is breaking down the charts and going over my thought process behind these stocks. So do your own research. I'm not a financial advisor. Don't forget to get up to 15 stocks for Moomoo as well, each up to $2,000. Fund your account at least $100. Using that link down below, you get 5 stocks, and fund it with at least $1,000. You get 10 more stocks, totaling 15 stocks, each up to $2,000, guys. So get on it. Use that link or go to stocksurfast.com/Moomoo. And of course, that is an affiliate link. It helps out the channel. I appreciate you guys as always. And with that being said, cheers. I'll catch you all later.